And our topic for discussion is Beyond the Hype, what AI can and cannot do at financial, treasury, accounting, and FX. And I would like to give a little bit exposure to our listeners about your expertise, past experience, and your current role in the company. So can you tell us a little bit more about yourself?
Yeah, sure. I'll try and keep it short. I mean, I've been working in the payments and FX and treasury space for a little bit over 25 years. First in banking and then in fintech. And in all of that time, really concentrating on larger customers, either large corporates, financial institutions, and increasingly these days, actually, other fintechs and payment companies, which is really fascinating in its own right. And as if you're in that industry for that length of time, you've really seen it develop. I mean, when I joined the cash management and payments department at the bank, together with trade finance and some security services businesses, we kind of got regarded as the poor relation to investment banking and the sales and trading side. Fast forward to the financial crash, banks started identifying those activities, particularly around the payment space, as something that had real recurring revenue, not as much cyclicality as the economy went up and down, very attractive. And now we're into the fintech era, where it's kind of reinvented itself as an industry again. So it's been a fascinating space to be part of over that time.
Can you give us a little bit description what Fenk is all about?
Yeah, sure. So Fenk is a B2B fintech. I'm currently working as the Chief Product Officer there. And what Fenk provides is really a platform that helps our customers automate all of the activities that take place before and after a payment. So if you imagine, payment execution itself is something that the banks, the big payment tech companies like Monzo and Revolut put a huge amount of investment into. They can execute payments at scale, in a regulatory compliant manner and very efficiently. But for a large enterprise, what happens before the payment's executed? How do we identify what the counterparty is? Is it a single payment? Do we need to batch things together? Are there events that have to happen before that payment's made? Is it contingent on some other money coming in, a contract being signed? Does that counterparty owe us money that we're then going to have to offset against it? All of those processes take place in different systems with a lot of data and typically involve a lot of manual processing on the customer side. And the same for things that happen after the payment. How do we allocate the cash movement to a customer, to a client subledger, to a business entity, a line of business, for example, internally? How do you reconcile that to an open account payable or an account receivable transaction? So all of those challenges, sadly, in some respects, but are still very much manual and a lot of disparate processes involved in there.
Is the modern software like QuickBooks, Xero, they're trying to solve those issues? Because for large corporate or even medium companies, I see the usage of the software like that, which is SaaS-based or locally based, but still trying to help with the reconciliation, with the building proper accounting 360 overview, with the balance sheet, with the income flow, and with the cash flow. Does it help, or it's still something which sits underneath all those accounting processes?
There's a lot of good point solutions for different parts of those processes. So you've got the accounting softwares. At the more high end of the market, the more complicated end of the market, that tends to be things like Oracle Financials, etc. You've also got ERP systems that track a lot of the underlying commercial activity that then generates the accounting processes. And then you've got customer relationship management platforms. You've got specialist treasury management systems as well. The challenge for a lot of people who work at the customer side in that payments and treasury space, though, is you've actually got too many systems.
Yeah,
you've got too much data and you haven't got enough insight. Because that working environment, very typically, if you want to look at one of those end-to-end processes, different parts of it sit in different platforms. You're then exporting data out of the treasury system, out of the finance system, for example, trying to merge it together. Inevitably, in a lot of places, it ends up in a spreadsheet. There's a lot of data probably in there that's irrelevant for some of the processes that you're trying to run. And all of that takes time. And that drain on time and resource means that very often having the time to really analyze what's going on at a more strategic level and identify flags and warnings that actually you need to be taking actions to prevent a liquidity event or some other issue that you need to deal with, that time gets squeezed. And really that's where automation softwares and platforms like Fenk come in. It's to try and really reduce down the amount of rote processing and give people the time to really do the analysis and look at the situation so that they can take actions and gain insights from the data. And that, I think, is where, a lot of people get very excited about AI. So diving into what's really possible right now and in the next kind of 6 to 12 months versus what's the hype, I think it's a very timely thing to do.
And actually, by describing the structure of the informational silos, which I used in this process, reminds me one of the discussion that we had in this podcast. Like, what is the difference between usual old school bank and new neobanks or startup mode companies? Because in the banks, everything was designed against the silos, like, I don't know, accounting software, and then onboarding or client relationship management, and then, I don't know, printing and delivering invoices or statements. So it sounds like the issue which Fnality is trying to solve is that the silos of information never has been designed or built for circulating through the company's veins or bloodstreams as it requires with the modern technology. Because how we operate digitally right now, it wasn't like even, 15 years ago. You wouldn't imagine getting the invoice online and then processing digitally, scanning the QR code, putting it into the banking system and expecting like certain automation around this process. So it seems that the product gives an ability to some not connected parts of the essential business process of the companies to be glued into one smooth working as a process, business process.
Yeah, and I think that's a very good way of looking at that whole area, is that you have these informational silos and getting data from one of those across into another, or dealing with a process that doesn't sit particularly comfortably in any one silo. That can be a real challenge. And for us at Fnality, it's obviously an opportunity. A lot of what we do with customers is look at those processes, look at very specific pain points, and configure solutions that don't mean that they necessarily need to replace some of those legacy systems, which for a lot of the functions that they were designed to do are still very highly functional. They do them very well, but it's these activities that span different platforms where we really come into our own.
And maybe you have really good examples in your experience what has been designed old way, old-fashioned, still works as a good high-functional output, but then still can be improved on top with the Fnality product.
There's a couple of examples that come to mind. I mean, if you take, for example, cash pooling. So cash pooling is a very traditional product from a bank, right? And what a bank's cash pool will do is it will look at all of the accounts that you hold with that bank. Those that are in surplus, it will then debit and pay the money into a central pot. And then those that are in overdraft, it'll take the money out of the central pot and bring them up to zero, reduces down your overdraft interest. That's a great system. It only works with the accounts that you hold at that bank, though. And at that end of the market, everybody is multi-banked because no one bank has the geographic spread for today's multinational corporations that are working in multiple markets. And a lot of banks, or very few banks, would have the credit appetite to provide all the credit needs for one of those big companies, let alone the desire of the company's management to, deal with multiple banks in order to spread their risk, their counterparty risk. So there's a highly functional product so long as you only want it to do what it was designed to do. And obviously you've got needs from customers now that exceed that. So it's those kind of areas where we can step in and say, look, we'll consolidate all of your bank account information from multiple banks. We'll then run the calculation as to which payments need to be made. We'll produce the payment instructions, and either get them directly to the banks or upload them into a system which you've already got, like a treasury management system that will then move the money. And that's an example that really looks at kind of a traditional corporate, manufacturing business, professional services business. One of the interesting things for me about where we are as a business right now is a lot of our demand comes from other payment tech and fintech firms. Because for a lot of those companies, they put a huge amount of investment into building a great client experience, which, if you go back kind of 5-10 years, the payment experience you got from a bank as a user was not great. So obviously that's a big differentiator for them. And particularly when you're looking at payments with an embedded foreign exchange component, they've put a lot of investment into making sure that they've got the best possible price and the best possible rates. Again, great commercial sense. The challenge then becomes if you've not invested in all of those behind the scenes processes, actually you reach a point where you can't scale, or you can't scale effectively. So we've been doing a lot of work in that space recently with companies to help automate some of those processes for them. And it's a really interesting, market segment to be involved in as well.
Yeah, and actually that's a great example to start thinking about automation and AI usage, because in one way, cash pooling seems to be like algorithmic challenge. Like if you have a proper visibility around the data, even the regular retail bank used to do it properly. You just need to have the proper visibility around the data from, I don't know, open banking or connections with all the accounts, and then proper calculations. At what step you think the AI make a great change in this process?
And one of the interesting things for me about AI is when you look at AI in this particular environment, there's clearly a lot of use cases which are very operational and efficiency driven. So if you look at areas like reconciliation or cash flow forecasting, for example, how do I get that data? And the ability of AI, which is well documented and well established to interpret images, bills of lading, invoices, etc., to deal with unstructured data and to get that data ready for use in a far more automated process, which then has greater breadth, gives you greater insight, etc. But what then becomes really interesting on top of that is, okay, so AI helps me with my operational efficiency. And that means that, I'm set up to scale. Fantastic. What can it do to help me in the more strategic realm? So once I've got my cash flow forecast, once I understand where I'm going to need liquidity in the future, are there AI agents or actual assemblies of AI agents, teams that you can create that give you the ability in a very quick and easy way to say, right, we know from the data that in 3 months' time, we're going to be short, a certain amount of US dollars. Where can we source that liquidity from? And then to run through the options using market data, is there, an additional overdraft that we could get? If so, what's the price? Is it a term loan? Is it a money market loan? Maybe look at some of the more non-traditional ways of financing that, maybe supply chain financing, invoice financing, etc. And suggest for each one of those scenarios, actually, what would that mean for your financial position at that point in time? What does it do to your net debt? What does it do to your total liabilities? How does that play into leverage ratios? And that sounds quite futuristic when you think that you could have a machine doing that. But if you break it down to its component parts, can you source the data? Well, we know that AI is good at that. Can you run the computational models that says, actually, what's my liquidity going to look like in the future if I've got enough data, if I can get all of those inputs in? And then, can you train an AI model to identify different scenarios, which different actions then help you to resolve, and have a number of different strategies for how those actions effectively get taken? So if it's a liquidity event, here's a bunch of financing activities that, given the right parameters, you can put in place. If it's surplus liquidity, here are the investment scenarios that we could look at. And that's where the insight that AI potentially can surface to people comes in. And that's also where, actually its ability to sift through large amounts of market data and say, actually, this is how much those things could cost you on an average. Or indeed, if you want to build links with a certain provider, you could say, well, we know that this is how much it would cost with that lender or that provider of investments. And so if you really break it down to those individual component parts and think about what an AI agent could deliver, that doesn't sound like an enormous stretch from where we are now. And that certainly sounds like the kind of thing that is achievable within a kind of 6 to 12 month time frame.
Okay, actually, it brings in my understanding, the split between AI modeling and statistics and AI agents. You actually highlighted that it's AI agents which can take the data, understand what is going on, suggest the actions, and then execute them. So in this case, maybe a little bit insights how you're building AI agents, because with the modeling and statistics, quite clear. There are a lot of tools. There is natural language processing. There are statistic-based models where you can build and say, okay, that's my data. Please do the projection and forecasting. But what are you utilizing, and what do you think the future for building AI agents? Is it built on specific players that we have all on the market, or how do you approach that?
I think firstly, training the AI so that it understands the context that it's working in is really key. A lot of people talk about data and how much data can you feed into the model to get the right output. For me, it really starts with what's the business objective that you're trying to fulfill? What are the business processes that you're trying to automate? How do we then break those down into responsibilities for agents? How do you make sure that those agents are focused on a sufficiently limited scope to be able to repetitively execute well? And yeah, there's different technologies that we've looked at internally and used for this. Yeah, and we're constantly looking at which is the best. And I don't get the sense that that's a situation that's going to normalize so that people are saying, oh yes, that's the killer app for building an agent anytime soon, because things are continuing to develop in that respect. But I think interestingly for us, when we've looked at doing this, the skills that you need in terms of coding and traditional software development versus the skills that you need that we might have thought of as more product management, business analyst, architect. It's that latter set of skills that really gives you the context, helps you to really specify what those agents are doing. And I think without a lot of strength in those areas, actually you kind of struggle with these kind of processes. And it does. I mean, I think, when you look at a lot of the hype about AI, there's a lot of discussion about how this is going to, vastly reduce the number of developer jobs that are needed, vastly going to reduce the amount of technology jobs in total that are needed. I'm not so convinced about that. I think the skills that we value might change, because one other thing that AI does pretty well is write code, given the right parameters, the right context, the right training. But I think that in that overall set of skills that we normally associate with a software development lifecycle, within a 12-month time horizon, there are still a lot of skills in there that are going to be very highly sought after, maybe even regarded a bit more highly than they are today in some respects.
Literally, I can hear this story, and I used to be an engineer. I wrote the first program in 98. And I really remember the story with the Microsoft.NET, because everyone was saying like, oh, we have code completion, which makes developers so easy to write the code. And actually, right now, if you create an e-commerce, you don't need to code everything like HTML, JavaScript, everything manually. You have a lot of frameworks, which is like just create e-commerce, and then it's deployed at functions with authorization. And I don't think that anything changed in 20 years after that. Like, developers still do coding, but the nature of the coding and abstraction has changed. So what you describe, and that's my question to you, you describe the data modeling, business analysis, and then kind of proper setting the expectation for the model to take the parameters in and generate the output. But it sounds more like data science rather than engineering, because defining the AI model, which is generating the outputs, it's not really coding, it's training and data science.
I think one of the other interesting aspects of where we are right now is looking at, in that overall solution that you offer to a client, how much of it is AI versus how much of it is more traditional rules-based process automation that requires coding. And actually, as we go through those kind of client discovery exercises, that becomes quite a major talking point internally. And where you normally get to is that there's an awful lot that you still need, traditional software development for. But there are very specific points, either related to data sourcing and integration, where you're having to use the AI in that mode of retrieving unstructured data, or to do very specific things around an agent, where actually you need those skills. And incidentally, you can also have agents that one of the options they've got to deploy is a very traditional rule-based model that somebody's coded. I think I could hear the skepticism in your voice when you were talking about, what happens to developers from here. Certainly not of a mindset that in the kind of medium-term future, we're going to see a world in which nobody needs to code. And our experience of using the agentic coding tools that are out there at the moment, these things that say all you need to do is put in a natural language prompt and it'll spit out an application for you. has been mixed at best, I would say. I know in the AI world at the moment, you've got a lot of big, bold claims being made by big, bold personalities who stand to make an awful lot of money if the valuation of their AI companies continues to rise. And I do think you need to look quite critically at, what do I need to use this technology for today that nothing else can help me meet as a requirement? Get focused on those things and ensure that the rest of the framework that you're operating in is robust, that you've got your software development lifecycle kind of skills and processes embedded, and you've got very good documentation and architecture. Because even if in the future we get to a point where an AI agent can write all the code, and what I've seen as well is there is a bit of a bias in a lot of those agents towards volume. So the more you produce, the better. If you set those kind of agents to work today and your foundational layers are not well established, you're just going to get layer upon layer of technical debt, actually. With a few hallucinations thrown in there for good measure, probably as well.
Actually, it reminds me of one of the technical tasks that we're doing or giving to engineers on the interview. We're asking to write the code which is finding duplicates in the physical folder on the disk. And they actually, what we find out, a lot of are going into the LLMs asking to generate the code and bringing us the code, which is a wrong answer, because you don't need to find the duplicates, because the file system is designed the way that you cannot have two similar file names in one folder. And that kind of brings this question for me, because LLM is trying to solve the problems which shouldn't be solved. With the engineering, the best code that you actually didn't write. Like when you're challenging back the product manager, the project manager, like, let's have this way to integrate and do the system. And then the developer asking, like, why are we doing this? Because there are other ways not to do this, not synchronize or achieve the results another way. Do you think LLM is giving the real feedback and challenging those prompts and those possible solutions into the product?
Yeah, it's a good question, because my sense is that LLMs have almost innate biases in them in certain directions. Volume is one. Optimism is another.
Exactly.
Give me a problem, I can solve it. It does remind me to a certain extent of where we were maybe back in kind of 2018, 2019 with blockchain, where, and you and I go to a lot of the same conferences and see a lot of the same speakers, I guess. You couldn't go to an event without somebody talking about blockchain. And if you were out there looking for investment funding for a new venture, it had to have blockchain in it somewhere. I'm not trying to knock blockchain and distributed ledger. It's a fantastic technology if deployed to tackle the problem sets that are really suited to that approach. But I think, you go through these phases in the market where a certain technology is flavor of the month and everybody feels that they have to use it.
Yeah.
Even for things that probably aren't actually, the best use case to deploy it.
And actually it brings me into the financial data processing, because like one of the well-known issues for statistic-based models, actually it doesn't think or calculate. It takes the most predictable tokens and put them together. And how does it work in terms of financial information? Because if I ask to multiply or add or subtract one number from another one, then I would like to have a robust answer rather than prediction, because I don't know, someone was getting one data and then you are feeding another data to the LLM and then it gives wrong answers. So are you dealing with those issues, or how are you approaching that LLM is token based rather than calculation based?
Yeah, and I think again that's a great example of choosing the technology and not assuming that AI is going to do everything for you. There are certain things that are actually computational problems. Particularly when you look at, into the financial space.
Exactly.
How do you build a balance sheet? How do you build a profit and loss statement? How do you run, leverage or working capital ratio calculations against that? Training an agent to select the data
is different from calculation.
Is actually different from training it to try to run the calculation, because, and you can, as I said, you can get an agent to select the data, use a very computational approach to run the calculation according to a set of rules.
Yeah.
And then you've got a robust answer. But it does take a lot of testing to do that. and understanding, and there's a lot of different techniques around ensuring that the prompts that you're using are the best possible ones, and fit for purpose, etc. Which thankfully we've got people on the technology side in the business who understand that side of it far better than I do. But those approaches and selecting the right technology for the job are really key.
So then maybe from another angle, what the hardest lesson that you learned so far by building this platform? Because I think the part of being product manager or kind of entrepreneurial role is to have a lot of appetite for creating something which doesn't exist. And then along the way, we're meeting the obstacles or challenges that we'd never seen. So did you have anything that was bigger that you initially thought and how you overcome it?
We've had a couple of instances where, and this is common to a lot of fintech startups, you become very focused on solving a certain problem and you've got the technology that will do it. The broader question of, is there an appetite out there in the market to buy that solution at a price point that meets your investment and makes it worthwhile, is a different question, right? And trying to separate out, is it solvable from, am I going to get paid to solve it? That's really where a lot of good product managers, I would say, earn their money.
Or sold by this price. Because once again, it's always about the pricing. Because if it doesn't fit the need of the client and doesn't meet the budget, then even if it's solvable, no one will go in to buy it.
Yeah, and I think as well, when you look at the automation of financial processes, that working environment that I mentioned earlier, too many systems, too much data, too little insight. For a lot of people who work in that day in, day out, you come in with your shiny new fintech solution, and there is a too good to be true element about it. And I think as well, what you frequently get when you run discovery sessions with people, you get all the edge cases thrown at you.
Yeah, exactly.
So okay, so it'll solve that particular problem, but if I've got a customer who has a very bespoke process, will it solve this? Will it solve that? And sometimes the number of edge cases that you get given actually becomes an excuse or a reason not to make the investment and to adopt the technology. The interesting thing about an AI agent as opposed to RPA is it can then have a look at those edge cases and decide what's the best approach to take to solve them. So that's somewhere else where I think, AI can play a role.
And what do you think the biggest challenges for AI agents in financial industry, like accounting, FX, payments, are going to be for the next 2-3 years?
I think there's a couple of things around where the limits that you can deploy an agent to, or let me phrase that better. What are the appropriate use cases? And what are the use cases where actually there are real barriers to deploying an agent? And I think if as an industry we start to get those things wrong, then you start to erode trust. And because you're dealing with financial services, that's actually the cornerstone of any client relationship, is that they're going to trust you to deal with their financial data, with the movement of funds, etc. To take a very straightforward example, right? You could create an AI agent and train it to, in certain circumstances, generate a payment instruction, send it via an existing API connection or host those connection to the bank for execution. You can do that. Should you do it? And what are the legal ramifications of doing that? Is a completely different question.
Absolutely.
Yeah, an AI agent is not a legal person. It can't sign a payment instruction. If it gets it wrong, who bears the liability? What's the reaction of the bank or the payment service provider to say, well, who actually authorized that? And when you get into those questions, you really, I think, as responsible product managers, leaders within the fintech industry, you've really got to look at those kind of demands and say, is that something we should be trying to fulfill? Is that something that actually that the regulatory and legal frameworks exist for today? And actually, do we want them to exist in the future to do that?
Yeah, exactly. Maybe we need an introduction of 3 robotic laws, like an AI agent cannot hurt the human by doing something or by not doing something. So yeah, we're there. And I think that's a really insightful information from your side. So I would like to shift to our last section of the podcast, is a book recommendation. So do you have anything that you would like to recommend to our listeners?
A quick confession, I don't actually read many business-oriented books. I mean, reading for me is something...
But any. Last one that we had in our podcast was a fiction book. So
Oh, this is very much going to be a fiction book because that conversation about what should you ask the AI to do, and at what point is the AI starting to take actions which traditionally are in the realms of a human actor, kind of reminded me of some of the questions that were asked in a bit of a sci-fi classic. You've probably had it as a recommendation on here before. Philip K. Dick's Do Androids Dream of Electric Sheep?
No, we didn't have. That's a classic one, but we didn't have it in our podcast.
Because that's one of the first kind of sci-fi novels to really pose that question. What is it that makes us human, and what should a human be doing versus what do we expect in the future, robots, artificial intelligence to do? Yeah,
thank you for sharing this really good book, and I recommend it to read it. And from my side, I'm going to go another way. I'm going to show the flaw of the humanity, because there is a really nice book by Daniel Kahneman, which is called Noise, Flaw to Human Judgment. Because we tend to think that humans, we're doing our job, and our mechanism of finding the patterns and solving the issues seems to be working for us, even from evolution perspective. Like, here we are, we're succeeded on this planet. But is this as rational as we think? Is it bringing the results as we think? Because we're kind of starting to compete against statistical models, which are better with the predicting, reading a lot of numbers. So that's a really good book to understand that actually our judgment is not so rational as we think. And Kahneman did really, really great job convincing everyone that economical models, they are not rational based. They are based on human behavior, which is not rational.